Good morning, and thank you for registering for today's webinar entitled When Hospitality Accounting Systems Start Thinking, Not Just Recording. Welcome. My name is Jane Pendlebury. I'm CEO of HOSPA, the Hospitality Professionals Association. It's Tuesday, the 10th of March, 2026, and it's 10 a.m. on the dot. I'm grateful to Joe Fuller and Michelle at Percipient for helping us pull together this webinar today. And I'm delighted to be joined by Joe from Percipient, who looks after product innovation for Sage Intacct alongside other responsibilities. We're due to be chatting for around 40 to 45 minutes today with time for questions. So we should be finished by around 10:45, depending on how many questions you ask, of course. Please do ask those questions throughout. There's a Q&A tab at the bottom of your screen. So pop them in there. And if there's not enough time to answer all the queries, we will promise to get back to you afterwards. The webinar is being recorded and we're happy to share the link afterwards, which we will do automatically, and it will be posted onto our website and YouTube later this week. I am pretty much, though, now going to hand over to Joe, who's going to take us through and explain this slide and carry on from there. So, Joe, over to you.
Thank you very much, Jane. Before I start, I just wanted to put this slide up really as a bit of thought before the presentation commences. You've probably heard the headline many, many times that AI is going to replace finance. Well, I don't think that's actually true. But what I do think something else is true is that finance teams that use AI will definitely replace ones that don't. And the reason for this is simple. The role of finance is shifting from explaining what's already happened to seeing what's coming next. My name is Jo Fuller and I head up product and pre-sales for Percipient. Percipient are an award-winning Sage Intacct partner, and we specialise in implementing Sage Intacct within hospitality. I have worked in systems and IT since 1998 for my sins, and I've done everything from implementing, selling, and demonstrating new technologies and applying them to real-world accounting challenges. It's not just technology for technology's sake. For the past 10 years, my focus has been predominantly on accounting within the hospitality sector, leverage technology to automate processes, streamline financial workflows, and improve efficiency. A hobby horse and a real big goal of mine is to help hospitality organisations thrive through the intelligent application of technology, and more recently through the emerging capabilities of AI, with a couple of goals in mind. Number one, smarter automation. Number two, deeper insights. And number three, improved financial performance. Okay, so let's get started. For years now, accounting has been treated as a historical record, a ledger that simply reports what's already happened. But in hospitality, this mindset is no longer sufficient. Hospitality operates in real time. Rooms are effectively sold by the minute. Food and beverage margins move daily, and ancillary revenue rises and falls with occupancy levels, seasonality, and also shifting demand patterns. Yet finance teams are still reviewing performance on monthly cycles. By the time your management reporting pack has been produced, let's say, for example, the third or the fourth day of the new period, margins have already declined, and the opportunity to address them has probably already passed. Hospitality pressures do not wait for the month-end close. Margin pressures can emerge at any point during the period across rooms, F&B, events, and other revenue streams. For example, settlement timings from online travel agents can shift revenue unpredictably. Payroll commitments continue irrespective of occupancy levels. Suppliers' costs fluctuate. Meanwhile, the cash flow is constantly moving. If accounting remains static, management response becomes reactive rather than proactive. And this is why accounting solutions must evolve into a living system. An AI-centric accounting system shifts finance from a reporting function to an active decision partner. By continuously integrating operational and financial data, you move from a static month-end snapshot to real-time dynamic reporting. And this is not just at period close, but throughout the month, with daily and weekly flash reports and intelligent applications running 24/7. The system provides real-time visibility into margin movements by outlet, by revenue stream, enabling early identification of working capital pressures before they escalate into cash flow strain. Moving from what's already happened to what's happening now, and more importantly, what happens next. Enabling management to take that immediate corrective answer. However, if the accounting solution evolves into a living, intelligent system, it becomes a strategic advantage. And in a margin-sensitive industry, particularly like hospitality, that advantage builds daily. In hospitality, we all know volume is not the challenge. Variability is. Every day, thousands of transactions move through the ecosystem into your accounts, from property management solutions, point of sale, online travel agencies, payment service providers, rooms, F&B outlets, events, and ancillary services all generate this continuous flow of financial activity. Historically, finance teams have tried to manage this complexity by reviewing hundreds and hundreds of rows of transactions. But in a high volume, thin margin industry, that approach no longer scales. The real financial exposure doesn't sit with the routine transactions. It sits with the exceptions. Reviewing thousands of correct transactions, that doesn't protect your margin, but identifying the abnormal patterns do. This is why the future workload of finance is all around exceptions, not processing the transactions. An AI-centric accounting system changes the operating model completely. It continuously scans 100% of transactions, not just samples, not just spot checks. It detects anomalies in real time across operating platforms and financial data. It performs intelligent reconciliations that understands timing differences, partial settlements, rolling reserves, FX movements, and so on. It recognizes settlement patterns against payment service providers, and it learns from them. Instead of matching line by line, finance oversee the risk by pattern. The result of this is a fundamental shift in focus. Finance teams stop producing volume. They start managing exposure, investigating exceptions, and by definition, they protect the margin. And when exceptions, not transactions, become the focus, finance moves from a clerical effort to strategic control. There is a common misconception that somehow magically AI will clean all this bad data. It won't. What it does do, and what it does do exceptionally well, is expose the weaknesses in the data quality far faster and more consistently than any manual process ever could. And in hospitality, that speed matters. Operational decisions are made daily, sometimes hourly, across rooms, F&B, events, and ancillary services. Pricing, staffing, and purchasing, they all depend on a clear understanding of margin and performance. But that visibility only exists when the underlying data is correctly classified. When revenue is misclassified, whether it be rooms, F&B, the margin visibility becomes distorted. When labour costs are allocated incorrectly from payroll, outlet profitability becomes misleading. And when the F&B costs are posted inconsistently, the foundation for pricing decisions quickly erode. Inaccurate data does not just create reporting issues. In reality, it actually drives operational misjudgment. And the longer the gap between the error occurring and it being identified, the greater the impact. In an AI-centric accounting system, will actually compress that gap. Why? Because it'll detect abnormal posting patterns and classification inconsistencies in real time. It surfaces emerging revenue and cost variances before the period's closing. It's flagging it. It's searching through the transactions. It's giving you that insight immediately. And highlights activity that deviates from the historical posting patterns. It learns from your opening balances. Every time it throws up an exception, if you accept it, if you change it, it will learn those posting patterns. It does not replicate financial judgment, but what it does do is certainly improve visibility. That compression, the reduction of time between error and awareness, is totally transformative, because when finance sees the issues earlier, management can respond quicker. The result of a stronger reporting integrity, more reliable margin visibility, and crucially, greater executive trust in the numbers is an amplifier for transparency. And in hospitality, where margins are sensitive and timings absolutely matter, transparency delivered at speed becomes a genuine competitive advantage. For decades now, the strength of the finance function was always measured by its accuracy. Were the numbers correct? Were the reconciliations complete? How accurate is our cash flow position? I'm not saying that accuracy doesn't matter. It absolutely, definitely does, without a shadow of a doubt. But in hospitality, accuracy alone is no longer enough. Operational reality moves faster than financial reporting. Demands shift in real time. Bookings accelerate or soften. Cancellations increase before revenue can reflect that change. Labour pressures build before payroll even reaches the ledger. And supplier costs move long before the compression becomes visible within the numbers. By the time financial statements confirm the variance, the business has already moved on. Accuracy explains the past. Anticipation protects the future. An AI-centric accounting system enables that shift. It connects operational and financial data continuously, not just month end. From the point of doing your end of day in your property management system to the numbers actually hitting the finance system, it's hours. It's continuous. It detects emerging variances, not just confirming them. This is not about forecasting once a quarter, once a month. It's about sensing the movement every single day. Daily, weekly flash reporting, checking those numbers, spotting the variances, giving the management team time to respond. When finance can see the pressure building in occupancy trends, labour ratios, or channel mix before it actually reaches the P&L, their role changes and it moves beyond scorekeeping. It becomes a strategic advisor, and that shift matters. Because the real value of finance is no longer in safeguarding accuracy. It's protecting where the business is heading. In hospitality, where the timing determines profitability, anticipation is not an enhancement. It's actually a competitive necessity. As automation expands, one big question is always asked. So what's left for finance? Well, I think the answer is pretty much straightforward. When AI can handle certainty, human judgment becomes more valuable. Transaction processing is necessary, but it's not differentiating. Reconciling settlements, validating postings, enforcing rules, these are all essential controls, but they do not create competitive advantage. In hospitality, the real differentiator lies in the decisions. It's the pricing discipline, it's the cost control, it's the capital allocation. Deciding where to invest, where to optimize, and more importantly, where to pull back. In a high volume, low margin environment, small judgment errors scale incredibly quickly. Pricing mishaps or missteps delay the response to cost inflation. An overextension of capital expenditure across properties and revenue streams, all those decisions compound. And that shifts the role of finance from one processing volumes to one that's actually shaping decision quality. And an AI-centric accounting system enables that shift. It removes the mechanical burden, automating reconciliations, validating, enforcing rules, while bringing consistency across properties, outlets, and revenue streams. Routine certainty is handled systematically. And once the certainty is automated, finance capacity moves to where it matters most. And what's that? Towards analysis, towards scenario evaluation, towards forward-looking oversight. Finance moves from processing transactions to overseeing margin, risk, and capital strategy. Automation does not diminish the role of finance. It actually elevates it. Because when machines manage certainty, judgment becomes the differentiator. And in hospitality, where the speed of execution and margin discipline is determining success, high quality judgment is the most valuable asset finance can provide. Wouldn't be right without actually mentioning auditors and audit controls. And again, that does play into AI as well. So traditionally, control has been something that we've verified after the event. So we've closed the period, we've reviewed the reports, the auditors have taken their sample transactions, the compliance, checks the outputs and so on. But in hospitality, it doesn't operate periodically, it operates real time. Rooms are sold continuously, commissions accrue instantly, VAT is applied at the point of transaction, revenue recognition begins the moment booking is made. Yet audit and compliance work, they all work retrospectively. The real risk is not sitting at month end, it sits inside the daily operations. For example, the strength of your revenue recognition rules, tax configurations, OTA commission calculations, and data governance across systems. And in a high volume environment, those small control weaknesses can scale very, very quickly. And that's why auditors are increasingly focusing on system design and embedded controls. The question is no longer just, are the numbers correct? It's moving from are the systems and controls designed to ensure that they're correct in the first place? In an AI-centric accounting system, it addresses this by embedding the controls directly into the workflow and applying the rules at the point of transaction, enforcing them consistently across the full population of data. Controls become proactive rather than detective. Exceptions surface immediately, not just weeks at a period end. And control is no longer something that we inspect after the event. It actually becomes something that we design into the operating system itself. And in hospitality, where speed, scale, and governance all matter, control cannot be reactive. It has to be designed into the core system itself. When we talk about AI in hospitality accounting, it's really, really important to just separate out the noise from the real opportunity here. And this is not simply about testing new tools. It's about reshaping how finance actually operates. And there are a number of core principles that define a modern AI-enabled finance solution. Firstly, automation handles certainty, leaving the humans to retain judgment. Rules, reconciliations, validations, these are all structured activities, and they should be systematic, consistent, and scalable. Human intervention should be reserved for ambiguity, risk evaluation, and decision-making. Secondly, continuous control replaces periodic review. Control cannot be something we test once a month, or when the auditors come in and ask for their cup of coffee and their sample transactions, and you put them in a room, and you leave them to their own devices. It must be embedded into daily operations, evaluated across the full population of transactions, not just samples. Thirdly, exceptions drive workload, not transaction volume. In a high volume hospitality environment, reviewing every transaction is neither efficient nor strategic. The exposure sits in the anomalies, not the routine activity itself. Fourthly, anticipation is more valuable than hindsight. Financial statements, well, they confirm your performance. What they don't do is protect it. Early signal detection is essential for things like your margin pressure, your liquidity strain, and any settlement drift on OTAs. This is where finance can add more value. And finally, governance and explainability is foundational. AI in finance cannot operate without integrity or oversight. Models must be controlled, logic must be well documented, and outputs must be defensible to executives, auditors, and regulators alike. So from those key principles, the following core functions will appear, and we're seeing them today in modern finance systems. AI can help automate and close and support continuous reconciliation. It can scan the general ledger across a full population of data and flag anomalies. Doesn't stop 24/7. It doesn't, have a coffee break once it gets to 1,000 transactions. It is continuously scanning and looking for those anomalies, learning from every single exception that is flagged and approved. It can surface intelligent and exception reporting across revenue, costs, and settlements. And it can provide early signals of margin pressure or cash flow risk. It can tell you which properties are under budget, over budget, which departments have had their invoices come through, etc. And all of this can be fully automated. It also maintains structured audit trails and embedded compliance control, so it keeps the auditors happy, moving that shift from, has the system been designed so that the numbers are correct in the first place? This is not theoretical. This is an operational infrastructure. And there are some core technologies that sit within an AI-centric accounting solution. And these will be common across a lot of different systems. Most important one is the machine learning. Well, what does this do? We've heard about machine learning all the time. This identifies patterns across large financial data sets and detects anomalies at scales. It can also do things like read your incoming accounts payable invoices and code them for you and learn from previous coding structures. And that, kind of sits 24/7 in the system. So the machine learning is here, and again, it works continuously. In addition to that, what you do have is your language models, and these allow the finance team to query the data, generate explanations, and produce structured finance narratives. I actually sat down the other day and I queried the new language model in a finance system. And I asked it to show me how to process an accounts payable invoice. And it showed me step by step how to do it. I then said, well, I was a bit unsure. Could it show me a video? And it actually then showed me the video of how to do the job. You know, you can ask it questions like, you know, for example, tell me which properties are under budget, over budget. You can also do things like, you know, show me if there are any variances and, you know, identify variances between debtors and creditors, cash and bank. All of these, it will interact with you. And most software authors have been training these language models for years. This is not new. And they've been trained with integrity so that they understand accounting rules, logic, interfaces, etc. So you've got your machine learning, you've got your language models. The next component is what we call the model context protocol frameworks. Now that's a really big technical term, but what it means is that there is a layer which will use and be able to dig into all of the financial data. And that layer, it's a governance layer, actually allows AI models to interact securely with financial systems and data sources while preserving access controls. The final piece, and this is where the real opportunity is around the AI agents. That's the final piece that brings all of this together. And they monitor activity, they execute workflows, they identify the exceptions, they work with that model context protocol, dive into the data, and the actual AI agents itself, that's where the process automation is. So the AI agents might be things like, you know, reconciling VAT. It might be things like, you know, looking at reconciling bank accounts or you know, that three-way match between your payment service provider, your bank account, and what your property management says your revenue has been. So these AI agents, this is bringing all of those three technologies together. And as I said, we're actually seeing that, you know, and AI agents emerging today. These can monitor things like close processes. Again, making that close process from a couple of days down to a single day, and actually over time, maybe eliminating the close completely. How? Because it can flag reconciliations, for example, variances between creditors and bank. It can detect unusual journal entries and pass them through journal authorization and highlight budget variances. And the answer finance questions in a natural language by analyzing rows and rows of data. So you can ask it certain questions and it'll come back with a sensible answer. They actually remove the mechanical work. And once that's done, what remains is judgment. And this result is not simply faster accounting, it is structurally different accounting. And what I mean by this is that it's a system that senses activity in real time, controlled by design, escalates exceptions, support judgments, and anticipate the risk. And in hospitality, where volatility is constant and margins are thin, AI is not just a background enhancement. It's becoming an operational backbone of the finance function, built for speed, scale, and better decisions. I'll end with what I started with, and that is AI will not replace finance. But finance teams that use AI will replace those that do not. The future finance function will not be defined by how well it reports the past. It will be defined by how early it sees the future.
Brilliant.
Thank you so much for joining us and listening. And I'll pass back to Jane, see if there's any questions.
Yes, please do. Please, I've got some comments definitely and some questions, but please do add to them if anyone listening has any questions directly for Joe. The first one is a comment, really. Great to hear we're not being replaced. Um,
Me too.
yes, which is probably a very key message to get across, although I think
Yeah.
possibly a lot of people have already appreciated that with HI. But on your accuracy comments, the fact that it's coming through more accurately, that should make our jobs, as I say, this is more of a comment rather than a question, that should make our jobs more interesting, focusing on the why rather than the black and
Yeah.
white what. So that is just really, really a comment, but I thought it was probably worth reiterating that.
Yeah.
There's another one here about systems learning continuously, and you talked about machine learning as well, and the fact that that will highlight exceptions. The question is, how does it know what the exceptions are at the beginning? Is there a lot of training or programming up front for the setup? Or is that something that it has its standards and then we'll find some anomalies for the user?
That's a really, really good question. So, things like GL outline detection, which is basically what I was referring to, will learn from your system opening balances. So, when you first put your new finance system in, you'll have your GL opening balances. Those balances will be against suppliers, customers, there'll be GL accounts, there'll be properties, location codes, departments, cost centers. And so that'll be its basis to which it will learn from. You can also tweak a lot of this to say, well, these are the type of transactions I want you to focus on. So, if revenue is you're happy with the classification with that, you can focus on the costs. So you can actually fine tune it to say what are the type of things to look at. So it learns essentially from your opening balances, and that's your training. And then obviously the more data you put through it, the quicker it learns. So again, it'll know whether the account is supposed to be in debit or credit, and so on. And mostly these will be flagged up with, what we call journal authorization. So again, it will route it through to an accountant, and it will actually identify what it doesn't like. So it'll say, well, I'm not sure about this, or I've not seen this high value posted to this supplier before. So again, the accountant going to go, yes, that's fine. I know about that. And it no longer becomes an outlier. So hopefully that's answered your question. The other form of kind of machine learning that we're seeing quite a lot today is around the AP automation side. So, where your supplier emails in an invoice, or you go to a portal and collect the invoice. Again, if it's not seen that before, then the kind of standard machine learning will have a good go at putting various different kind of GL accounts to it. But then the more that you use that supplier, the more posting patterns it recognizes, it will learn, and speed that up. So we're seeing that as well. Also seeing quite a lot of machine learning within kind of timesheet tracking and things like that. So yes, machine learning isn't new. It's actually been in finance systems behind the scenes for quite some time. Hopefully that answers your question.
Yeah, no, that sounds like a comprehensive answer. Thank you, Joe. We've got another one here from one of our regular attendees, Mark. So you can now receive PDQ batches net from Adyen, for example, as a payments transaction supplier, and AI will help reconcile that to the gross amount. So net from the payment system to your gross amount.
It can. It really depends, I suppose, how you bring that data in. What you can do is when you bring the data in, you can put it to a payment control. So there might be like an Adyen payment control, and what goes in is what the customer has actually paid you. And then when it's received, either via a reconciliation or you receive it just net into the bank, then again, we can set up some matching rules to take out of that control account exactly what's being paid. What you've got left in that control account at the end of the month is genuinely, stuff that Adyen hasn't paid you for. And obviously, so that's a timing issue. And then obviously the charges or the net or the gross charges that you would get, and you would just basically journal that out once a month. But AI can certainly identify any variances there as well.
Perfect, thank you. And then there's one that says, can you identify any actual user cases? And that's coupled with where will AI go next? So I guess that's kind of two questions in one. And I think you have given some use cases already, but I don't know if there's anything else you'd like to highlight, or if you'd like to do some predictions for AI in the future.
Oh, this is where you need AI to do predictions on AI, isn't it? Right, I'll answer the first question. So I think around kind of, what are the use cases? Certainly close automation. We're getting that now. It's in the product today. So you can, all of your month-end tasks, you can set up individual tasks for them. You can issue those out to people, and then, 10 days before your period end, it can start, spamming all of your different heads of department saying, can you please, get your invoices in, etc. And then the AI bit is when those close automation tasks have been identified, you can actually then, put them into, an AI agent, which will then say, well, part of my period end process is I have to check my creditors balance back to the creditors control account. AI can do that for you, and it can identify and say, actually, yeah, there is a variance. And then you can literally, and through the language models, it will explain potentially what those variances might be, and then allow the user to just go in and kind of check those. So I think certainly around the close automation, we're going to see a lot of things happening there. I think we're going to find, once the infrastructure's in the finance product and finance solution, I think we're going to very quickly see some innovations coming with the new agents. So around, intelligent cash matching, we've got intelligent as it is, but, this will be far superior. Things around maybe VAT reconciliation. These are all essential use cases, and this is where I see a lot of the kind of transaction processing and the number checking and the reconciliations that have been done on Excel spreadsheets today. I would see that being controlled by kind of AI agents in the future.
Perfect, thank you. And this one's another comment, actually. We may not be replaced, but with the online training, we might lose some of our internal trainers. Although my experience would say those people will be snapped up and used elsewhere. But
Absolutely.
the querying the system on how to do something and then getting a video, if you're still confused, is fantastic. Now, there's a question come in here. And Jo here is our expert today on finance systems, but she does work for Percipient, specifically Sage Intacct. So her answer to this one might be a little biased. Are there any particular accounting systems you would recommend with advanced AI embedded?
Oh, that's a difficult one. Without being biased, Sage Intacct.
Yeah, there you go. There you go. Right, there's another one here. I'm reading this fresh. We talk about AI, but are there recommended systems, add-ons across hospitality that seem to be being used more regularly across businesses? So, are there recommended systems, add-ons across hospitality that seem to be being used more regularly across businesses?
Yes. Obviously, you've got your property management systems, you've got your procurement systems, and there are some market leaders within that. Also, AP automation. So if your F&B purchasing is going through something like, a Procure Wizard or another procurement kind of tool, then, that's fine. All of your invoices will come there. But again, AP automation is important for anything that maybe isn't F&B. So again, lots of invoices coming in, and again, there's different AP automation tools. Within Percipient, we do have our own kind of add-ons that we promote. So again, that's gone through a kind of stringent checking process, looking at the market, finding out which was the best ones, looking at the integration capabilities and so on. But yes, there are common ones that we see time and time again, in either budgeting and forecasting, F&B, procurement, and obviously the PMS systems, EPOS systems, stock systems. At Percipient, we integrate to almost all of the property management systems. We've done them before. So we brought in the revenue journals. And again, we interface to all of the kind of procurement systems as well.
Fantastic, thank you. And probably time for one more. This one here is from Patrick. I agree AI will not replace jobs, but change them. What do you think this means for teams on the ground, both in finance and across the wider operation? He says he was watching something this morning about how AI is actually dumbing people down. This is something I've heard before as well, not making them smarter. Will these systems help educate people about the relevance of finance to their area of work? So I guess that's people who are less involved, not working directly in finance, but will it help them? Will it help educate those to the relevance of finance in their area?
That's a really interesting point. I was having a conversation with a friend over the weekend, and she works in finance, and I was telling her about my presentation this week. And she said, but you'd still need to understand accounting, wouldn't you? And I said, well, of course, definitely. You're still going to need that knowledge, that information, of how to kind of dig into the variances and make that decision. So, it's not going to kind of replace that fundamental knowledge. And even with some of the AI models today, sometimes it's not right. If you've ever put anything into chat GPT, then sometimes it gives you the wrong results, and I actually do argue with it quite often, actually. So I think it'll never replace that base knowledge. I think in terms of how to ask it the questions to get the answers that you want. I think that would be key. I think for non-finance people, I think the language models we'll see develop over time to make those easier to understand for non-finance people. Maybe your GMs, your heads of departments. Maybe they might be given the AI, kind of functionality to ask questions that they would normally ask somebody in finance. Did I approve that invoice? Oh, yes, you did. Why am I over budget? Because you approved that purchase order, and so on. So I think, it's the communication and for non-finance people, it's going to allow them to, interface to a finance system, a lot quicker. Hopefully that makes sense.
I think that makes perfect sense and actually brings us quite nicely towards the end of our allocated time today. So thank you so much, Jo. That was a great insight and well presented. It's much appreciated. And the questions were very well answered. So thank you. And thank you to all of you listening for your questions as well, which were very, very helpful and always very welcome to receive questions from the audience. And we've got thank yous coming in from people as well. As always, if you need formal advice, then please approach your professional advisors or come to me at HOSPA for a referral. Please also let me know if you'd like to be directly introduced to Jo and the Percipient team. If you'd like to take a look at the HOSPA.org website for upcoming events, we'd be grateful. We have a number of webinars scheduled covering PR with AI, actually, ESG and many other topics as well. And we have a few in-person events coming up too. Next Tuesday, we'll be in Edinburgh with Alessandra from Focus on hospitality and Ryan Haynes from Haynes Marcoms. So that should be a good event locally there in Edinburgh. You can still register if you're local to the area or even if you're not. As a team at HOSPA, we'll be at Tech 360 and I'll be moderating a panel early afternoon on the Monday with some key industry figures plotting the career paths of hospitality technology experts, which could be interesting too. And then the one I always like to mention is our Great Green Balloon Debate, which is on the 12th of May this year in London, and one of our best events of the year where everybody involved in ESG fights out what's the most important, but fantastic because they've all got the same goal at the end. But thank you very much for your time today. Thank you, Jo, so much for that presentation.
You're welcome.
If we do get any further questions, I'll pass them straight on to you. But thank you all for attending and I hope to see you all soon. Thank you and goodbye.
Thank you very much. Bye.